Edward Stevenson's Timeless Wealth.net, and the following will feature 3 securities demonstrating appealing technical patterns. Up first, here we have the 2-month chart on Blockbuster Incorporated, traded on the New York Stock Exchange under the symbol BBI. Coming off of mid-January, that is this trading session right here, we saw a gap down in price, where the price was trading in around the mid-70s range and gap down to the mid-50s range. Since then, the market has retraced and found a potential bottom at the 34.5-cent mark. That's Wednesday's trading session right here, or the low on Wednesday's trading session. Following which we have Thursday's trading session, which formed the spinning top candle and our doji candle, whichever way you like to look at it. Basically, this indicates the fact that a reversal in the market is possible. This is a reversal signal. Friday's trading session confirmed that, so we met the confirmation rule. That's the way I like to think of it. And moreover, on above average volume, which is ideal and resembles that ideal price volume relationship you want to see. As the price moves up, you want to see volume grow. This is undesirable in the market. That means the sellers are in control, and it's no wonder that a downtrend or retracement in the market followed. A longer term outlook on BBI 6 months chart does appear as if we found a short term, maybe long term, maybe mid term, who knows, some sort of bottom, and the market is reversing. We'd like to take advantage of this chart pattern and look for entry in the event the market breaks out. The key breakout level is 53 cents per share. Now, the zone that swing traders, day traders have to play with is the 53 cents per share mark, all the way up to 70 cents per share, which is the low coming off of this trading session right here before the price gap down. Percent wise, you're looking at a good 40% channel right here, so do expect traders to be taking advantage of the market in the event the price does break above this key breakout level. You are also looking at several other minor resisting levels, including the 60 cent mark, the 66 cent mark, which I believe is this mark right here, as well as in the event that you decide to hop in on a breakout, once the price breaks above 53 cents per share, you do always want to keep a stop loss in there in the event that the breakout is not on strength but a head fake, so to speak. And an idea for that would be 50 cents per share. That'd be a safe mark to keep a stop loss at. The reason being is that if we zoom back into the 2-month chart and just adjust that line, I'm looking at support, minor support, and at this point in time it happens to be minor resistance at the 50 cents per share mark. The reason being is that it happens to be the close on this trading session and the open on this one right here. So this would be a minor supporting level in the event the market breaks out. We want to see strength in the market and that breakout confirmed by another trading session appreciating in the market. And here, looking back at the 6 months chart, if the price can make its way back into this channel right here, between 70 and 80 cents per share or so, this could be quite a nice return investment for any traders, swing traders, day traders looking to make some quick bucks on a trending chart play. The next one we have here is Cel-Science Corporation, traded on the American Stock Exchange under the symbol CVM. And quite simply, based on the 6-month chart or a longer term perspective, look at the daily chart on CVM. We are in a downtrend, so if you want to look at it in a creative manner, let's take this high here and these lows here, and you can see that we clearly are in a downtrend. However, another way to look at it is to look at it from an even longer term perspective. Take the low on that candle right there, the lows here, and extend this trend line out here. So now we're looking at a falling wedge pattern, which could indicate potential reversal in trend in the coming months, perhaps the coming weeks, in the event that the price breaks above this key resisting trend line. In any case, this is the key resisting level. I imagine that as the price continues fluctuating in the market, it will approach decision time by the time this trend line meets with this key resisting mark at 90 cents per share. The market is also facing resistance at the, what was the high on that session? The 76 cents per share mark, which is basically the top or resisting channel coming off of this period right here in late August, early September. So you can see that the price is testing supporting levels dating back to that range. A key supporting level, on the other hand, lies at 60 cents per share, and that's just based on the highs coming off of this period right here and the lows in this very same range. This resisting trend line is basically based on the highs coming off of this period right here, this session right here, the highs made off of this channel, as well as this part, or rather this point in time right here where the price was unable to break past this resisting trend line, which again will more than likely meet the 90 cents per share mark by the time the price comes up to test it, if that doesn't of course occur earlier on. So what I like to see is a test of the, again, the 76 cents per share mark followed by 90 cents per share. In the event that that does occur, we could be looking at an entirely different chart setup with CVM and a long-term reversal trend. Reversal in trend. Lastly, we have Athersys Incorporated, traded on the NASDAQ exchange under the symbol ATHX, and what I found here was a downtrend in price. This one rallied quite well on significant volume after trading insignificant volume, of course, compared to this period right here. And in any case, it is approaching a critical decision, that is testing this supporting level right here, the low on this session, which was 231 per share. Let's take a look at the close, 234. So that'll be the key mark, 234 per share. That's the mark that this period right here is testing, and if this mark doesn't hold, if the low on this session doesn't hold 231 per share, which is just 3 points underneath the close, it could see a massive landslide to this area right here. Now, am I saying that would occur in one trading session? Absolutely not. Chances are momentum players will take advantage of the market if it does slip below this supporting level and it starts fluctuating between the $250 and $120 range. Now remember that in any case, whether it slides down or decides to test resistance at this resisting trend line, as well as the 312 mark, which is this resisting level I've drawn horizontally, in any case, you're looking at quite a significant range in terms of price and percentage wise. So do be aware of the fact that this can go either way, depending on what kind of volume we see and the activity that occurs in the market. So throw this one on your watch list. Make sure you're watching it, because this can provide for significant return on investment. Let's assume that the market breaks past the 312 mark, which is currently resistance. The next resistance level it would have to tackle would be the high coming off of this trading session right here, which is at $395 per share. So again, in any case, we're looking at quite a significant range in terms of price and percentage wise. So keep all three of these stocks on watch, that is ATHX, CVM, and BBI. Once again, this was Edward Stevenson from TimelessWealth.net. Here I've given you a snapshot of our site. This is what it looks like. This is the home page. If you scroll down, you'll find we have quite a bit of materials here. We have all sorts of articles, publications, opinion posts. We have some interesting discussion here by very credible authors that we obviously scan for on a daily basis to bring you the best material available on the web. We also have a new feature called the Daily Watch List, where we feature all sorts of stocks that are of interest for one reason or another. So in any case, do check out our site, and I strongly encourage you to subscribe to our free newsletter for overlooked trading and undervalued investment ideas. And that would be done very simply just by entering your email right here, whatever that would be, and clicking subscribe. Once again, thank you for listening.